Silver Dave here. I haven't posted in a few days, and I wanted to give you guys an update on what I've been working on over the last few days and why I haven't been posting videos. And pretty much, I've been looking at the sort of macroeconomic outlook for 2021. So let's find out what I've been looking at for the past few days. One of the things I've noticed when I was looking at macroeconomic data for the United States of America is a trend that has happened since 2008 and has been compounded over the last year, I would say, or accelerated due to the current environment, right? And there were external shocks that accelerated this trend. And the trend was there was a decrease in the velocity of money. And I don't know if you realize, but usually the velocity of money tends to stay constant unless there is a drastic economic shift in the overall economy. And the trend since 2008, at least for the United States, is that the velocity of money is decreasing. Now, to make it simple, it means that actually people are using money, or they are pretty much as an indicator that people are buying less stuff and transacting less in the United States economy. And I was thinking, well, what could this like tell us? Because it literally fell down a cliff in 2020. Like, usually you never see this type of move for monetary velocity, right? So I decided to look at one economy that is well known to have a slow velocity of money or a decreasing velocity of money, and that pretty much had, like, I would say, a higher level of velocity of money in the 1980s, and then had a decrease in the velocity of money. And I tried to find data on the velocity of money for Japan in the 1980s, and I wasn't able to get consistent data on it. But I was able to get the GDP for Japan, right, from the U.S. Federal Reserve, and I was able to get their monetary supply since 1955, and they've increased by quite a lot, their monetary supply. We could see how much they've increased this. Insert chart. Let's see. Yeah, they did a lot since the 1980s, I would say, and the 1990s. That's when they really accelerated the money printing, boom, up into the 1990s, and then a little bit slow down and keep on printing. Pretty much this area, so from the 1990s to 2000s, is somewhat similar to the United States, where what we're seeing today, except that it's been accelerated in the US. And so I decided to find out what was the velocity of money during that time for Japan, because velocity of money is pretty easy to calculate. It's GDP divided by money supply. And since I have the GDP, I have the money supply, I can look at what's the velocity of money, or roughly what is the velocity of money. And this is M2 velocity. So what I found was, in the beginning they start around 1, and then they're down like 0.7, 0.8. So a decrease of 20% for the velocity of money is pretty bad. In most economies, it's pretty bad. And usually it's a strong indicator of a slowdown. And I went to look at the stock market during that time period, and pretty much the stock market the trend was downwards, and in the end it ended up in sort of a recession and crashes. It was prone to crashing downwards, was an overall downward trend, and never able to break above like the 22,000 levels. Sometimes it went a bit above, but it had like this, overall trend was bearish for the long term. And it kind of like, I don't like bringing bad news, but for me, like when I look at this and I look at the type of economy that is the Japanese economy, it's a highly advanced economy with a lot of capital. It has a lot of research, and in many ways it's similar to the US economy. Um, I just think that like when all the macroeconomic environment is indicating that potentially the U.S. stock market, despite the initial boom, because in the 80s Japan also had a boom. If we look at the 80s, they had a pretty big boom, but in the 90s, due to the slowdown and what we saw in the overall economy, and in addition they were printing money at the same time at a high rate. It led to a long downward trend for a long time. Now, the difference is in the US case, right? The slowdown of the velocity of money happened much quicker. I mean, this is a 50% decrease, right? In less than 8 years. While in Japan, it took over longer than, I would say, maybe 15 years. So it's probably around half the time at 3 times the speed. That's 5 times the speed. So honestly, I personally, like, if you were to tell me that was the case, I wouldn't say it's out of the realm of possibility that we see a crash that comes to the overall markets at a much faster rate than what we saw in Japan. Japan sort of like it was flat, it teetered, and then it crashed. What we might see is overall through the last, at least from last year until now, is a flat, like a race upwards and then a race downwards. That could happen. I don't know if it will happen. I don't know if there's no guarantee that there's a crash. There's no guarantee that it will go up either. I don't have a crystal ball. I can't see into the future, but it is very worrying that the velocity of money has decreased so much, and it's been on a downward trend for quite a while. I honestly, like, if you're an analyst and you're objective about this and you look at this and you're like, like, yeah, it's not a great sign. Like, you can't look at the velocity of money and say like, oh, it's halved over the last 8 years and it's on a downward trend and the stock market's going up and being at 180% GDP. That's a great sign for the overall health of the economy. I'm not talking about the stock market economy. But overall, if you are a long-term, like, sort of analyst investor, you would probably sit back and say like, it feels bubbly. It doesn't just feel bubbly, it looks bubbly from the trends and from the data, right? Do I think we will have a crash? I don't know. You could have a very big party before the crash. That's what happened in the Japanese economy. If you look at what happened in the late 80s and early 90s, there was a humongous party. And then there was the hangover. And the question is, will next year be the year of the big party or of the big hangover? You never know. You never know when the music will stop. But having the velocity of money is kind of like saying that at the party, we've got no more beer. That's kind of the best analogy I can give right now. And I've been pretty much working a little bit on improving the gold prediction algorithm. I've gained, like, I think for the 14-day, I've gained like 2% accuracy, which is okay. It's pretty good. I did 3 days of work for 2% accuracy. Improvement of accuracy, decreasing of errors. That made me. The main thing is the decreasing of the errors and the slight improvement in accuracy without overfitting too much. And also, I try to look at what were the features sort of that was being taken into consideration, and what was the blended models. I put different models and blended them together. It's a way of stacking models, basically. And then I found that, like, pretty much I'm pretty happy that I have a lot of weak learners. The way that gold moves, at least from what I've been looking at and what I understand, is the price of gold, the direction it moves, has a lot of components to it. There's like the stock market, there's the US stock market, there's Asian stock markets, there's gold's own price movements, being overbought and oversold. Cryptocurrencies do play a role in it. There is emerging markets, other commodities. I can see here, for example, for some of the models, the features are is gold's like own exponential moving average, probably acting as a trend line, an overall trend line. And then you have like other commodities, you have stock markets, Asian stock markets. You have Bitcoin, you have volatility index for the US, you've got the NASDAQ, and some other ones that look more at like the S&P 500 and the Asian stock markets too. So there's a combination of factors, but nothing is a strong factor. You know, there's no one factor that plays a major role in the determination of the price of gold. So that seems more reasonable because, you know, there is a lot of things that's interconnected in the markets. So anyways, I'll be publishing another video once I'm finished with the model, and I will share the Japanese economy velocity data so you can look over it. I got this information from the Federal Reserve website, so you can check it out yourself, like if you want to look up the data and see if it corresponds. And also I will add the links to the Nikkei and the velocity of money and the S&P 500 historical movements, so that you can see that potentially we are at maybe where the Japanese were in 1990, right at the end here, where probably we might be where they were in 1990 at the, you know, after an initial crash and then afterwards like a rebound. Except this time, of course, the magnitudes are different, but maybe the direction and the pattern would be similar. Anyways, thank you very much for watching. This was Silver Dave. If you liked the video, click the like button, click subscribe, helps me out a lot. Thank you very much. Dave out.